So what a wild ride that 2020 has been for investors. We're almost seeing pre-COVID records to be broken here in equity markets. But that doesn't mean that there wasn't a massive opportunity that a lot of individuals missed. And especially even in our industry and the investment professionals within it, they just completely missed the boat on this. And it circles around the fact of like this buy and hold, or that there's changes that are made inside traditional mutual funds and portfolios where they're picking different stocks and they're perhaps, selling Amazon and buying Apple, or selling Tesla and buying Disney, or, buying, airlines and selling pharmaceuticals, whatever. And again, what happens is that they focus, and we touched on this in an initial video, but the asset allocation didn't adjust. So it's not that we need to see wholesale changes from a stock perspective, because those are correlated. When we're in the depths of the COVID crisis in the third week of March, almost every stock was lower. So it wasn't prudent to move from individual security to security. But what it was prudent to do was to actually rebalance your asset allocation and take advantage of that market opportunity. And so what we were able to do is, because we were owning long-term US Treasuries and gold and different things that went up in value dramatically during March, we didn't sit on our hands. And so what we did was we trimmed that back, went back into equity markets, and then actually created some enhancements thereafter. But what that allowed us to do was, the market really, if you're an investor, you'd be kind of, if you fell asleep for 6 months, it doesn't look that bad. You're down a few percentage points, but you missed out on a massive opportunity. So one of the most unfortunate things that clients and professionals overlook when it comes to volatility and risk is that it is opportunistic. You have to take advantage of those opportunities and maximize them through your asset allocation, and have a different mindset when it comes to risk and volatility, because it is your friend. Getting a 7% rate of return all the way through doesn't really create a lot of opportunity. But having asset classes that go up and down significantly over time gives you the potential to always sell higher and buy lower, and then refresh and revisit the portfolio as the market cycle matures. But it provided a massive opportunity, one that allows us to have a far greater rate of return than we would have if we would have just, buy and hold in the traditional mentality that most professionals hold.